In other business news, economic growth in South Africa is projected to be at around 1.5% in 2025 and a further 1.8% in 2026. KPMG is forecasting that inflation is also expected to ease further in the near term, resulting in lower interest rates. The positive sentiment is based on overall economic developments fostered by successful elections, the suspension of load shedding and improving logistics. KPMG lead economist Frank Blackmore speaks to this now. Thank you so much for your time, Frank. Let's start here. The reaction to the slight uptick in inflation. CPI had been forecast to continue easing, but it was not to be in November.
Yes, and there are good reasons for that. So if you look at our global economic outlook, including the South African outlook, of which you mentioned some of the numbers there, the headline is basically geopolitical uncertainty and potential trade tensions can cloud short-term improving economic growth. And one of the main reasons for that was the sort of US post-election uncertainty that has sort of enveloped global markets, including South Africa's markets. It led to a big depreciation in the rand following his election on the fears that these trade impacts may take place sometime in future. And that led to an increase, as you said, through the energy prices into the inflation rate, which resulted in that little uptick. But I think those things will sort themselves out as well, and we'll start to focus more on fundamentals over the medium to longer term. And those do look improved, as you said, with the energy availability, the reducing inflation, and therefore reductions in interest rates. And that's good both for business and consumers. It puts money in people's pockets instead of repaying debts. And that will all contribute to a better growth forecast for next year, at least, in 2026.
Let's talk about that growth forecast. What would really tangibly dictate growth reaching 1.5% in South Africa for next year? It becomes quite tricky when there are other matters, be it politics or global trade issues, as you've mentioned.
Yes, exactly. So the enemy at this time to growth is uncertainty. I think, as you said in your introduction and previous segment, everybody in South Africa in the economic area and the markets expects inflation to continue to remain below that target level of 4.5%. In fact, your previous speaker said below 4% for quite some time. That gives the Reserve Bank room to continue decreasing rates. We project at least another 75 to 100 basis points coming in the first half of next year. And that'll, of course, be beneficial for growth prospects in South Africa. But because there's been not much focus on this issue for quite a number of years, there are a lot of things that we need to correct at the same time, including infrastructure bottlenecks that you spoke about. We know the business and government are dealing with some of those. The deterioration of the cities. A lot of business activity obviously takes place within your city, but if your city doesn't have water supply and constant power and working robots and logistics, that slows down that productivity as well, element from within the cities. And then, of course, public services. Your workforce is more productive if it's healthy, if it can commute between work and home, so if transport systems are working, if they're educated in the right way to supplement the skills required by the economy, and if there's a safe and secure environment for me to be able to commute early mornings, late at nights, etc. All of these things contribute to longer-term economic growth prospects. But I think the prospects for those are better. With the government of national unity, a lot of these things are coming on the radar, and hence our increase in that growth forecast.
As a parting shot, Frank, what would growth at 1.5% mean for ordinary South Africans? You just touched on it in the latter part of your previous answer, the ability to commute, the job security that is needed in South Africa with unemployment so high and really just an efficient government.
I think we need to build on that. So 1.5 is the start. It's a lot higher than what we used to for the past few years, unfortunately, which was around 1 and below. But in order to make a proper dent in things like unemployment and people's lives, we'll have to grow closer to that 3% rate. And if that's the target for this first regime of the Government of National Unity, I think that would be a virtuous target for them to have.
Thank you so much for your input. Frank Blackmore is a lead economist at KPMG, talking us through their positive outlook on South Africa's economic growth from next year.